Hello and welcome to the live market analysis and overview of key markets with me, Jody Samuels. But first, who are we? FX Trader's Edge is a premier global online trading school, home of the Wavy Tunnel Pro trading system where you can take our accelerated training at any time. Our goal is to give the trader the tools to navigate the global markets with confidence. And if you like what you hear today, you may be interested in joining our accelerated Wavy Tunnel Pro trading program. Just go to wavytunnelpro.com to see details. And now on to market analysis. Today we're going to cover the fundamentals overview. What are the key market drivers in this market? And we will look at the dollar index and certain currency pairs, stock indices, and certain stocks, bonds, gold, and oil. Intermarket analysis is key to understanding market correlations and what is driving the markets. And at any point in time, there are different drivers. The key driver which continues to lure markets is the positive vaccine news. Let's do a recap from last week's market analysis. Last week, the market movers included the presidential election results and the Pfizer/BioNTech vaccine news. The market was very upbeat, pricing in an improving global economy. Traders rotated out of NASDAQ, which includes many stay-at-home stocks, and into the Russell, Dow, and S&P. So this is last week's price action. A spike in the Dow and the S&P, and NASDAQ sold off, and a spike in the Russell 2000. The dollar index had been trading down since the COVID outbreak in March. Last week, the COVID-19 vaccine news drove the dollar index higher in what could be a trend reversal, even though it is too soon to tell. The currencies took on a risk-on profile by driving up the yen pairs. That means selling yen against most of the other currencies. The yen weakened against the dollar as well. So this is the price action for the risk-on news day last week when the vaccine news broke. U.S. Treasuries also started to turn down. Interest rates up, as you see on this chart, having been a safe haven for investors for years. With the risk of increasing fiscal spending and a higher inflationary environment, some market strategists are calling for the end of the bull market in bonds. And finally, with the Pfizer and BioNTech announcement of the vaccine last week, the markets took profits by selling gold. And oil is a commodity that benefited, as this could mark the return of international travel, so the travel industry did well on the news. So that is a recap from my market analysis from last week. What are the drivers this week? Are these trends continuing? Let's take a look. This week's news is all about Moderna. Moderna mRNA NASDAQ symbol became the second U.S. company in a week to report positive results from its COVID-19 vaccine trial, raising hopes of a quicker economic recovery from a pandemic-led recession. Moderna soared 7.7% as it said its experimental vaccine was 94.5% effective in preventing COVID-19 based on interim data from a late-stage trial. So let's go through the different asset classes now, and this week we're going to start with stocks because there are other factors affecting the currencies which I want to address afterwards. The stock markets continue to perform well with trillions of dollars being pumped into the system from monetary policy. With today's Moderna vaccine news, the Dow hit a record high of 29,964, up 470 points and 1.6%. The S&P was up 1.21% at 3628. NASDAQ up 0.8% at 11,924, and the Russell 2000 up 2.34% at 1784. Investors are still rotating out of NASDAQ and into the Russell, Dow, and S&P. These are the daily charts of the four indices, and the arrow to the left of the price action is where we closed the market last week when we did this market analysis 1 week ago. So we can see that the Dow double topped at last week's high. The S&P didn't quite make last week's high. NASDAQ is more or less flat, and the Russell 2000 made consistent highs. Now this chart just shows Moderna. This is the weekly Moderna stock price. So we can see that Moderna has moved higher the last 2 weeks, and Pfizer has actually, after it moved up, it actually sold off into this week. And these are the stay-at-home stocks. Amazon is trading flat, sideways. Peloton sold off. Netflix is trading sideways, and Zoom has sold off. This is the weekly. Let's just look at the dailies so we can drill down a little bit more, and you can see the sideways price action in Amazon, the sell-off in Peloton, the sideways price action in Netflix, and the sell-off in Zoom Video Communications. While those stay-at-home stocks continue to underperform, the outperformers are the value stocks and the reopening stocks. So for example, Berkshire Hathaway and JP Morgan are solid value stocks, and Las Vegas Sands and Walt Disney are some of the stocks that would benefit from a vaccine. So these are the weekly charts, starting with the 2 vaccine stocks, and then Berkshire Hathaway has had a nice move up on the weekly chart, JP Morgan as well, Las Vegas Sands as well, and Walt Disney as well. Moving down to the dailies, we can see the price moves higher for these value stocks and the reopening stocks. And there are many value and reopening stocks that are doing well right now at the expense of some of the technology stocks, which, as we saw, are trading sideways or selling off. So just a note on the Russell 2000, which consists of small cap stocks, that's a proxy for the reopening trade. And note that the reopening trade won't be a one-way street with COVID infections surging worldwide. Traders will be balancing short-term pain with long-term gain and optimism. So that's going to cause a two-way market. It might be worthwhile to see if this rotation continues for a while, even with the COVID cases on the rise. It appears that the market is still gung-ho on pricing and positive outcomes on the COVID vaccine front, despite the surge in cases. Also, the small cap stocks on the Russell have underperformed large cap stocks over the last 5 years. And it appears that the tide is turning there. So it might be something to take a look at. Now let's move on to the dollar index and some of the currency pairs. As we mentioned earlier, the dollar index had been trading down since the COVID outbreak in March. And the COVID-19 Pfizer vaccine news drove the dollar index higher in what could be a trend reversal, even though it is too soon to tell. So let's take a look at the dollar index and some of the other currencies. This is the dollar index, and the gold box is where we ended up the day the vaccine news broke last week. And since last week, the dollar index completed a 5-wave move higher. We can count the waves, 1, 2, 3, 4, 5. And now it's in the process of correcting this Elliott wave 5-wave swing move. And markets usually correct in 3-wave moves. So we are seeing a nice 3-wave correction down. And once price takes out this blue dotted line, we will be in a new uptrend, i.e. higher highs and higher lows. And if we take out this red dotted line, that's the risk, and that would be the stop loss on a long dollar index position. So if we take out this line, then the dollar index will trade lower. We will look again next week and see how the dollar index plays out. Last week, we showed the dollar pairs and the yen pairs. This is the chart of the dollar pairs. The arrow shows where we were last week, so let's just see if there's been any follow through. The euro is a little bit higher than last week. The pound is a little bit higher than last week. The dollar yen is actually lower than last week, so it didn't follow through on the move up for the dollar against the yen. And the dollar Canada is higher than last week. The Aussie dollar is a little bit higher than last week, and the New Zealand dollar is higher than last week. And looking at the yen pairs, the yen pairs have not been as consistent either. The dollar yen, as we mentioned, is lower. The euro yen is lower. The pound yen is a little bit lower. The Canada yen is lower. The Aussie yen is a little bit lower. But the New Zealand yen is a little bit higher. So let's focus in on this New Zealand currency. It looks interesting. Well, good news came out of the Asia Pacific region with a large free trade deal called the Regional Comprehensive Economic Partnership, the RCEP, involving 15 countries, including China, Japan, South Korea, Australia, and New Zealand, basically making up 30% of the world's population. The trade agreement was first proposed in 2012 and was signed on Sunday with a joint statement that the deal, quote, will play an important role in building the region's resilience through inclusive and sustainable post-pandemic economic recovery process. Now, this news impacts the Australian and New Zealand dollars, moving them into risk on status. The Australian and New Zealand and Canadian dollars are actually called commodity dollars with risk on status. So let's take a look at our scanner to prove it and then drill down into the currencies themselves. The scanner is a currency heat map, and I filtered the currency heat map for buys, which are blue boxes. So all of the markets that came up when I scanned include the Aussie and the Kiwi crosses. So the Aussie dollar, the New Zealand dollar, the Aussie Canada, the Aussie yen, the Aussie Swiss, and the New Zealand Canada, the New Zealand yen, and the New Zealand Swiss. All bullish. So now let's drill down. I put 6 of these currencies up. 3 Aussie pairs and 3 New Zealand pairs. So across the top we have the Aussie dollar, the New Zealand dollar, and the Aussie Canada. And then across the bottom we have the Aussie yen, the New Zealand Canada, and the New Zealand yen. These are the daily charts. We can see that all of these pairs have been in an uptrend. I would suggest following these pairs. Will they continue to follow the trend and move up? It's worth following. It's worth keeping an eye on these pairs and looking at the smaller time frames to see if there are any opportunities to buy on retracements. With the currencies, it's always good to see what the flavor of the week is or the flavor of the month, and clearly the flavor for the last few weeks have been all of these currency pairs. So all of the Aussie and the Kiwi crosses. So let's just keep an eye on them for the next week. Lastly, let's talk about gold and oil. Gold is historically a hedge against inflation, also a safe haven investment. A move to risky assets means a move out of gold temporarily. And gold has started to recover from its losses last week when the market wrote off safe havens, including gold. Gold will gain stimulus once Fed policy kicks in with more spending, and gold will outperform on inflation concerns, but that's down the road. Oil is a commodity that is benefiting from a vaccine, as this could mark the return of international travel. Also, Biden's advisors noted a national lockdown is not in the cards, and expectations are for a return to pre-pandemic economic activity in 2021, which is positive for oil. And this is where we were since looking at the markets last week and looking at the daily chart and the weekly chart of oil. We can see that oil is starting to break through that channel line on the weekly chart, and oil is a little bit higher than last week's price. On the gold front, we see that gold is off the lows after the tremendous sell-off last week. That concludes today's market analysis. Check out wavytunnelpro.com and join us on the 5-day accelerated trading and mentorship program. See you next week.